Hey everybody, my name is Gene Marks and thank you so much for joining me. I want to talk about at least 5 ways that you can be smarter about your financial statements. And the first one is this. When I talk to clients across the country, this has been going on for years, people that have ran their businesses effectively and efficiently, the people that know what they're doing know their numbers. Now, no one has to sit there and wait until the end of the month to get financial statements from your accountant, and a lot of times they come a lot further after that. You can get specific, very important numbers that will help you run your business on a daily basis. I call it the flash report, and that is absolutely something that you should have. And here's what you do. You want to go to somebody in your company, an admin person. It can be your bookkeeper, but it doesn't have to be. And every day, you want them to report to you the 5 or 7 numbers that are at the pulse of what's going on in your business. Everybody wants to know what cash is as of today. Do you know what your cash is in your business right now? Do you know what your open receivables are right now? Do you know what your overdue receivables are? What your open payables are? Maybe your year-to-date overtime earnings, or your year-to-date revenues, or number of customers that you have, or what your value of your backlog is, or what the value of your quotes outstanding. Those are just some examples. So have this flash report, have these metrics, but you've got to show the same number from the corresponding previous period. So if you tell me that you've got $5,000 in cash today, I'm like, okay, but what does that mean? What was it at the end of the year? What was it compared to this day last year? Is it up? Is it down? That's really relevant. Number 2, have a 6-month target of available cash. You need to have 6 months of available cash always on hand. That should always be your target. Stuff happens, and the smartest owners, and you're one of them, had enough cash, or the availability of cash, whatever those funds were, to see your way through any economic downturn. Number 3, read your general ledger. Now, it is not the most exciting read in the world, but your general ledger is basically the diary of your business. Every transaction that you have going through your accounting records goes through your general ledger. And then your accountants, or your accounting software, extracts that general ledger information into your financial statements. Number 4, start a rolling forecast. You want to do a forecast because you don't want any surprises. And I'm going to ask you, starting this month, can you forecast out your operations for the next 90 days? And when I say 90 days, here's all that you really need to make sure that you do. You need to make sure that your forecast is such that you've got your operating expenses. So your operating expenses might be like your payroll, your internet, your overhead. You know what that's going to be for the next 90 days, right? I mean, that's pretty easy to figure that out. So once you have your operating expenses, the toughest thing you'll have to figure out is your sales. What will your sales be over the next 90 days? I know you don't have a crystal ball, but you do have a lot of information. You've got quotes that are outstanding. You've got your forecast report, your opportunity report. You've got your, you've got past history. You might talk to your salespeople or interview a few of the people involved. You might know what the traffic is that's coming through your business. You'll probably know enough to make a pretty good estimate what you think your sales are going to be each month for the next 90 days. And all you have to do once you figure that out is just apply an average margin. So if your typical margin is anywhere from 20 to 30% on what you sell, use 25%. This isn't exact science. It's a good estimate. So you figure out what your sales are, you apply the margin, then you've got your overhead already figured out for the next 90 days because that's easy to know. And then the last thing that you do is you figure out, okay, in the next 90 days, there are going to be any big cash payments for anything, debt payments, big supplier payments that I have to make, something like the tax estimates. When you do this every month and you roll forward the next 90 days, first of all, it'll become easier and easier each month. And second, you won't have any surprises. Finally, guys, get your financial statements from a CPA. There are 3 types of financials that CPAs will do for you. They will do an audit, which costs the most. They will do a review, which costs less because they're just asking questions without asking for the documentation. Or they'll do a compilation, which means they'll just take your numbers and put it in the form of a formal financial statement. So have a flash report, right? Daily report, key numbers in your business, target 6 months of cash. That's where you should always be. That's cash availability. Read your general ledger once a month, print it out, go through it with that red pen. Start a rolling forecast. I want you to look forward 90 days every single month so there's no surprises, and have an outside CPA get involved. This is my email address that you're looking at, so feel free to email me if you'd like a PDF of this presentation, and happy to answer any questions directly. Thanks for joining me, guys. I hope this helps your cash flow so you can grow and prosper in the years to come. My name is Gene Marks, and I'll see you on smallbizahead.com or sba.thehartford.com. See you soon.